we look at shorts, we can see that they were somewhat aggressive last year, a little bit, you know, end of October and so forth, when price was declining. But since then, they've been very cooled off with their short positions, which means they're not focusing on short positions right now. Their focus is on longs, but not so much accumulating them, but offloading them. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was recorded on May 30th, 2023. Here is a brief snapshot of the positions held by the institutions as of that date. And so, welcome back. Let's start by taking a look at gold. Welcome back. Nice to have you guys. Hit the like and subscribe button if you haven't done so already. And we're going to delve into the positions that the banks are currently holding with respect to gold, oil, and the major currency pairs. We're going to take a look at the supply and demand on the charts of the monthly and weekly chart. And we're going to try to determine what the banks are up to based on what they have been doing recently with their positions. Now, when we take a look at gold, gold is one that we've talked about to great depths. And so, you know, when we look at what has been taking place with their positions lately, we can see that long positions have been declining from highs back in May 9th of 266,000 and dropping down to now 237,000. Now, why is this happening? Well, we've talked about this for quite some time. It relates to what's happening with the Euro-US dollar. And what's happening with the Euro-US dollar is the banks need to take profits on a massive amount of long positions that they've accumulated. And so with gold moving in the direction as the euro drops, gold's going to drop. So they're taking advantage of this move to the downside, and they're taking profits on gold just as they have been on the euro. Now, one other thing that I'll point out to you is that last week when we were taking a look at the positions held by the institutions, they held 58% of their positions long, and now they have been increasing them long to 66%. So as the banks are offloading their long positions, we have retail traders increasing their long positions, all right? So now we're testing this trend line here. We got that move to the upside as I was suggesting, you know, that we can get a move to the upside off that trend line. And but overall, the momentum is to the downside at this point. We could get some short-term moves to the upside, but they will be short-lived, and we expect the continuation of the move to the downside. All right? So just keep that in mind as we progress forward. Next, we have oil. Very interesting thing here. Look at the positions here on oil. Over the last several months, March, April, May, these sells relating to shorts have been very cooled off, right? So there hasn't been anything really of interest here in terms of short positions until this very last set of data, where now we see they increased them from 124,000 to 159,000. That's quite aggressive, right? Considering that we were very cooled off recently. So when we look at the charts to see where that takes place right here, this candle right here. And as you can see, we got a slight dip to the downside. But if we're looking for a sentiment, and we want to understand what the institutions are thinking, we'd have to look at the colorations here. And what we can see is, well, if we go all the way back, what we can see is we have moments of slight bullishness that appeared, but they never lasted, and the sentiment always went back to being neutral. So that's telling me that the banks are not really focused on oil right now in terms of moving it in a very specific direction. So if the banks aren't interested in moving this in a certain direction, then I'm not interested in opening up any positions. So we move on. And take a look. US dollar. US dollar, the coloration of the cells for longs are cooled off. Coloration for the cells for shorts are cooled off. Coloration for the cells for long and short positions are blue. That means they're cooled off. They're not focusing on the dollar at this point, which is another reason why I wouldn't want to be trading the dollar as well. Okay, so we move forward and we come across the Aussie. And this one's an interesting one because if we take a look at their short positions, what do we see? A major increase over the last few weeks. 97,090 all the way to 113,000. Look at how red that sell is, 113,000. That's quite aggressive. And one thing I will point out is 113 is very close to the 117 max, meaning they're going to have to start taking profits on their short positions. Okay, closing shorts will usually fuel a move to the upside, and I believe last week's bullish momentum was likely the banks closing off their short positions. Now, if we look at what retail traders are up to, last week retail traders were 89% long. 89% long. And now if you look, they switched their longs to shorts because price was heading lower. Switching from longs to shorts. Now they're 29% long, 71% short. So they're majorly short as price is coming into demand and as the banks are about to start offloading those short positions. Okay, so they've probably already started offloading their short positions because that's how the retail traders would be acquiring such a strong short position in the first place. All right, so something to be aware of. I'd be watching for a move to the upside. All right, let's take a look at the USCAD. USCAD, you know, the first thing that comes to my mind when I look is I see longs are red, meaning they've been focusing on them, and I see shorts as blue, meaning they have not been focusing on them, except for this last sell where we have 37,000. That's quite aggressive, comparing itself to the recent lows of 16,000, 17,000. And what do we see? A big drop in price is what took place. But they have been focusing on long positions. They reached highs of the 90s. Recently, they went as high as 77. And now they've gone down to the high 60s. So we're not quite out of the woodwork yet with respect to longs. But this red cell showing up here on shorts is something that I would like to pay attention of because I believe this might be the beginning of a move to the downside. Okay, something to just be aware of as we go forward. Now, USCAD, when we look at retail traders, they were 86% short last week. 86% short. They switched those short positions to longs as price was rallying up. Now longs are 87%. Okay, retail traders are 87% long. Okay, 87% long. So let's keep an eye on that because, you know, long term we see a move to the downside. This is a lot of ranging happening on the weekly chart. So a lot of stuff could be taking place here. Okay, a lot of moves to the upside, downside, a lot of things can happen. What we need is a break of this range to the downside or to the upside. Okay, and that's what I am watching going forward. US Swiss, not much to see here. Longs are cooled off, shorts are cooled off. Okay, nothing going on here. Price rallied on the weekly chart, contacted a weekly area of supply. And now that weekly area of supply is in play. Retail traders last week were 57% long. 57% long. And now they're 59% long. Okay? They haven't done much with respect to their positions. So, anything could really happen here. Pressure will be to the downside since weekly supply is in play. So watch for that move to the downside in the coming week. All right, now we got Euro US dollar. Now the Euro US dollar, when we look at long positions, we can see that they've been aggressive for a very long time. And so, look back, all the way going back to last year. If we look at shorts, we can see that they were somewhat aggressive last year. A little bit, end of October and so forth, when price was declining. But since then, they've been very cooled off with their short positions, which means they're not focusing on short positions right now. Their focus is on longs, but not so much accumulating them, but offloading them. Now, recently we came into contact with an area here that should be noticed. Okay, take some notice of this weekly area of demand. That's the upside pressure that we see currently coming into the market. All right. When we look at retail traders, we can see that last week they were 82% long. 82% long. Now they are 71% long. So they're not as long as they were. Okay? They're not as long as they were. So they're closing off longs and entering into shorts over the last week. And this is as price has been declining. Okay, so keep that in mind going into next week. I think overall the larger pressure is going to be to the downside. Okay, over the longer term, it's going to be to the downside. Why is that? Because institutional supply has come into play, which is pushing price to the downside. And they need to take profits on long positions. Okay, so those two will put a lot of pressure on price to the downside. Short term move to the upside is what I'm expecting because of the weekly area of demand that's coming into play. And as the banks are offloading their as the retail traders are offloading their longs, getting into more shorts, all this kind of tells me that we're likely going to see price move short term to the upside here. Pounds, look, longs, aggressive. Shorts, not as much. Coloration of the cells for long and short positions tell me that they are somewhat bullish. At least they have been somewhat bullish. Longs reach as high as 77,000. They've been declining since. Very difficult to read this chart. They just removed an institutional supply area. So price is in the middle of the waters. Depending on the current that comes in and the winds that come in, the ship can move in either direction. So we'd have to wait for live trading to take place from the banks to determine what momentum they're going to kick price into. All right. What I can tell you is last week, retail traders were 55% long. And this week they are 49% long. Okay. So they're pretty much 50-50. They don't know what to do with their positions. So we're not seeing much here. So I'd stay away from trading this one. US dollar, Japanese yen. Look at the column on the longs. Again, look how aggressive. 117 to 136,000. Look at the coloration of shorts. Very blue. Now they're slowly exiting that blue. They were super aggressive with their longs back here, but they're becoming less so now. We have seen a big push to the upside, and this was expected as we had institutional demand coming into play right here. Push to the upside until supply is contacted. This is what we're seeing. All right, this is what is logical. Another thing I can tell you is that retail traders were 76% short. 76% short. And now they started to exit out of those shorts, okay, because they dropped from 76 to 72%. 72%. They're likely going to get in long positions when price is contacting supply. So be watchful of that. And the Kiwi longs are cooled off. Shorts were recently hitting highs of 22,000. We've since seen them close off some of those short positions. Now we're down to 16,000. Institutional demand just got taken out, which is opening up a move further to the downside, if that is indeed what the banks want to do. Retail traders are 94% long. Okay, 94% long. At least they were last week. And now they're only 73% long. So as price is dropping, they're exiting their long positions and getting into shorts. Okay? They were wrong with their longs. Price is dropping against them. Now they're starting to get into short positions. All right? So these are things that I would pay attention to going into next week. This is what I will be paying attention to. The overall theme is very important to keep in your mind, because if you lose track and lose sight of what's going on here, you could easily make some wrong trading decisions. Okay? So be aware of what's going on heading into the week. We've got lots more data on the stock markets, on all the other different commodities and bonds. There's so much going on here at the school. www.whiteoakfx.com. Don't fall prey to what the banks are trying to lure you into. Do the right thing. Trade. Use your own intelligence. Use your own analysis. Trade alongside the banks. Make money. That's what we do. All right. Enjoy. Take care. Have a good one.